In Forex trading, various types of charts or diagrams are used to visually represent price movements and analyze market trends. These charts provide valuable insights into historical price data, allowing traders to make informed decisions. Here are some of the most common types of charts used in Forex trading. 1. Line chart. A line chart is the simplest form of chart, depicting the closing prices of an asset over a specific time period. Each closing price is connected by a line, forming a continuous line that represents the price trend. While line charts provide a basic overview of price movement, they lack detailed information about highs, lows, and opening prices. 2. Bar chart. A bar chart displays price information using vertical bars. Each bar represents a specific time period and includes 4 price points: opening, closing, high, and low. The top of the bar represents the highest price, the bottom represents the lowest price, and the tick on the left side represents the opening price, while the tick on the right side represents the closing price. 3. Candlestick chart. Candlestick charts are similar to bar charts but are more visually informative. Each candlestick represents a specific time period and includes the same 4 price points as a bar chart. The body of the candlestick represents the opening and closing prices, while the wicks, upper and lower shadows, represent the high and low prices. Candlestick patterns are widely used for technical analysis. 4. Renko chart. Renko charts focus solely on price movements, filtering out time and volume. They consist of bricks, rectangles, that are drawn in a continuous series. The size of each brick is determined by a predefined price movement, such as a specific number of pips. Renko charts help traders identify trends and reversals more clearly. 5. Point and figure chart. Point and figure charts disregard time and focus on price movements. They use XS and OS to represent price increases and decreases, respectively. The chart only plots changes when a predetermined price movement, box size, is achieved. Point and figure charts are used to identify support and resistance levels and to filter out noise. 6. Heikin-Ashi chart. Heikin-Ashi charts provide a modified representation of price movements. They use a specific formula to calculate the candlestick values, which results in smoother and less noisy charts. Heikin-Ashi charts are used to identify trends and reversals with less volatility. 7. Tick chart. A tick chart displays each individual trade executed in the market. Each tick represents a trade, and these ticks are plotted over a specified time period. Tick charts are used for analyzing market activity, particularly in highly volatile markets. Each type of chart offers a different perspective on price movements and can be chosen based on a trader's preferred trading style and the information they wish to glean. Many trading platforms offer the flexibility to switch between different types of charts to suit a trader's analysis needs.
Are you a trader? Aren't you profitable yet? Do you need a free economic calendar? In MetaTrader 4, go to Market tab and search for Porsage. You can use Porsage News utility for free.
We express our gratitude for your attention. Porsage Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.